All right, traders, this is Christian from Hertz, Tribeca Trade Group, and just a very quick video for Friday, which I don't normally do videos after the close on Friday unless there's something big going on with the market, and we had a pretty nasty day, so just kind of wanted to do a quick video and kind of just talk about today's market action, talk a little bit about next week. Take a look at kind of global equities and just what's going on. Well, first of all, I'll start with today's jobs report this morning. Came in lighter than expected, which in the topsy-turvy world that we're in, I think some traders were looking for a negative report as a catalyst to get the market going because one of the major concerns right now for the market is that the Fed wants to raise interest rates, right? And that usually sucks a lot of the liquidity out of the system when the Fed raises interest rates. And so the logical thing is here, a negative report, 155 versus 198, would actually cause the market to go up, and that was the initial reaction this morning. But there's just some bigger issues weighing down on the market, and clearly there is also, I guess, a fear of a slowdown is kind of going above and beyond what the outcome is for interest rate hikes, which who knows, they could still want to raise interest rates even though the data is getting a little bit weaker. So that's that. So we started the day, the market was rallying a little bit, but we're basically back to, so let's just go ahead and start to talk about some of the technicals. And I'll talk a little bit about today's option activity as well. But we're basically, we'll start with the S&P. I've got SPY up here. We're basically back to this is November, right? November and October lows. I see that, for me, without really making any crazy predictions, there could be another low coming in here or a fresh low. Maybe we go down to here, down to here. Don't know yet, but it looks weak to me. I see this on the MACD. We just might be getting a bear crossover, but every day we're getting these big moves, right? So where did we finish for the week? If we go and if we look at for the week, we finished down 3.7%. Small caps, which I'm going to talk about in a minute, down 5%, and transports, which really got hammered this week, down 6.8%. Nasdaq Qs also finished down 4%. International not faring much better. Treasuries, gold, they rallied this week. If I go over to sectors, you can see I just kind of brought this out. Pretty risk-off stuff, right? Gold miners and utilities, even though utilities had that one rough day, I think, where they sold off. So some hiding places kind of came under fire this week too. You can see consumer staples, they fared a little bit better, but still down 2%. A couple weeks ago, consumer staples value was actually, in the plus category, was outperforming very well. Besides utilities, but you could see I don't even have XLV in here. I guess it just didn't make the top or the bottom, but healthcare got hit pretty hard this week. I think that was a overcrowded long that people were hiding in, so that got beat up this week. And then on the downside, you can see a lot of areas. Talked about the transports. The energy names really got hit hard. OIH down 8.8%. The financials also got hit very hard, down 6.4%. Solar names, which had a good week the previous week, down 6%. So industrial, so a lot of groups down over 5%. Pretty nasty stuff. And looking at there wasn't a lot of bright spots here in international land either. The Greek ETF was up 3.8%, which is kind of odd. But there really wasn't a lot of pluses here. A lot of names again down over 4%, as you can see from here. So let's move back. I just wanted to kind of show you what the performance was for the week. But if we go over to the Qs next. They made a new low in November. That's going to be, coming into question. What I saw on the 1 hour chart was, we closed below value for the week. We've got one of these version point of controls. I was trying to play some puts at the end of the day to get down to 160, but maybe that will come next week. And then we'll look at IWM. So, Qs, let's go back to the daily chart just for a second. We failed at the 200-day moving average, right? This is with the hindsight 2020 glasses on. Oh, we failed at the 200-day moving average. That was your no. I mean, we're basically we wiped out that gain. Really, really difficult market to kind of get your arms around day to day because yesterday we closed right on the highs yesterday in the Qs, and I talked about that in yesterday's video. A lot of growth showed some signs of life. So I'll talk a little bit about strategy. I mean, I put on a couple trades, during the day yesterday, and I added, I think one. What did I do? I added two trades, two swing trades, and I think I'm out of both of them. I'm out of BABA, which I put on yesterday. I was able to hit a target this right in the beginning of the day, so once it kind of got back to my cost base, I took it off. I'm long some FTC, which I kept on for now, which that's underwater, but it is really tough to kind of analyze this on a day to day and say to really make a lot of conclusions. And so that's kind of why I'm doing the video for the end of the day is, the way the as fast as this market is moving, putting on swing trade positions right now, you just have to realize the risk that you're dealing with. And there's not much really as I go through the technicals, right? I mean, a lot of this is just kind of it's hindsight stuff, but we are moving very quickly, and I think the best opportunities continue to be day trading right now, and you really have to be. So I'm going to move over to IWM as I'm talking, because IWM, which I think is the focal point, and we mentioned that there was a kind of a hammer looking bar yesterday. Well, that's been wiped out. We're right back to the lows, and we've broken through that October end November low. So that is not a great sign. That's not what I want to see. That's also a bearish MACD crossover. Who knows? We could be headed to, what is this, 137. So I want to talk a little bit about strategy and day trading. I think a lot of traders, we do have the support. I just wanted to check in on this. We do have the support here, 142, which is the top of value for the year. If we break the 142 level, then I would say watch that VPOC to the downside, right, which is basically 137, right? So as much as this market is moving, with these candles, you do have the opportunity to both buy puts and buy calls. Now, I want to talk a little bit about, I think a lot of traders, and even myself, right, for the last couple of years, I've been mainly one-sided because we've been in an uptrend. We were in an uptrend for years, right? So I was mainly playing on the call side because when you bought puts, it was very hard to make money on puts. There was a great comment that came from our trading room today. We were talking about this. I was just trying to get traders open to kind of playing this from both sides. And there's a great comment that said, hey, when I buy puts, that's when the market goes up. And I think that that statement, it kind of sums up the last few years, right? I mean, if you bought puts, a lot of times you got stung, right? Because, the market has been in an uptrend. However, we're not. So the main point of this is we're not in that market anymore. We're not in the market where as soon as you bought puts, the market ended up going higher if you didn't get out of them really quickly, and you end up losing on the put side. I think this market has changed, right? Because I used to, I would say about 2-3 years ago, I was probably running a long, 50, almost 50-50 long short book. And then that changed the last couple years because just puts were not working. And I think just from a muscle memory standpoint, traders have abandoned the puts, unless you've really are very flexible with what you're trading. But I think for the most part, when I say the most part, a lot of traders have been just really playing things to the long side because it's been difficult to the short side. But, if this market is going to move like it did today and move like it did 2 days ago, there's a lot of money to be made on the short side. And you don't even have to go home with the puts at the end of the day. So, that's one of the major points that I wanted to just mention a little bit about strategy in this market. If this is going to do that, there's different levels. Just kind of think of this as just lines on a page, where you could basically, take advantage and say, hey, where's the next line of support? I think that played out very well today in the Qs. I was kind of banging my head against a desk today because I was not fast enough today. I honestly was not setting up. I was either thinking of one or two things could happen today, especially when we got that weaker report. I was either thinking that we would have a choppy day, or, we might have some continuation from yesterday. But, when this happened, once we broke into value, it's a great signal to say, hey, where are we going to go to next? And I said, hey, watch this one. I think it's 163.07. And as we were doing this, I mean, if the market's going to fall 1.5 to 2% in a matter of 2 hours, there's some decent money to be made. So, am I saying, go out right now and buy puts? No, but just realize that you have that tool available to you, right? It's not just about. I think this market right now is not just about buying calls and going long on the dip. It's being very strategic, and if we start to break down, clearly the market is there's some momentum to the downside. So that's the main point of the video, and just to kind of take a look at the technicals. Also, if we look at what's going on internationally, this is a 5-year chart of the DAX. You could see that we have now, we've broken below the October lows there. So just because the S&P hasn't broken the October lows doesn't mean it's not coming, in my opinion. Again, doesn't mean that there's not plenty of opportunities, and maybe we don't get there in a straight line. But, there are going to be these bounces like we had yesterday that you could take advantage when the sentiment gets very negative. So, if we kind of zoom in here on the 1-year chart of the DAX. So why am I focused on the DAX, by the way? Because Germany is a big developed market, right? And if they're breaking down, that means something globally. Also, if we want to look at, so, that's a little bit of international developed markets. If we look at EEM, EEM was flirting with the 50-day moving average. Unfortunately, that trade canceled out for me. So it's kind of back to the drawing board, which I will be doing this weekend, and kind of seeing, where I can spot opportunities in this market, both sides of the market. But EM, that long canceled out below 50-day moving average. So it's good to talk about this too, because this was not a big move. If you went long EM, I think it's a good place to take it off. Of course, this video is for information purposes only, but I think you want to respect your levels in this market, considering how fast that we're moving, right? Small losses are fine. Big losses, we don't want big losses right now. So that's that. The other thing that I keep hearing, I wanted to bring up today's option activity. It's almost what we saw 2 days ago. Just 2 days ago, which was not Wednesday but Tuesday, just a lack of call buying that's taking place in the market. A lot more puts on Tuesday. Yesterday it was kind of calls outweighed the puts. This is aggressive activity. This is not your overall put call ratio. Today, which I probably miss. Oh no, I have Teradyne in here. Good, nice sized put order. But yeah, the call buying. There's Facebook calls, a couple other small orders, a lot of rolling of positions. But bottom line, it just seems like investors are not buying the dip right now. They're not thinking that this is an opportunity. I'm hearing a lot about algos. Oh, it's the algos to blame. Yeah, well, this argument, I don't know. I mean, I don't think that that's the cause. There's high frequency traders out there which will game large orders, but I think right now there's not a major bid in this market. I think sellers are pushing this market, so I don't really buy into algos. I think if you ask people who say it's the algos, which algo? What algo? Is it a VWAP algorithm? Is it a TWAP algorithm? Is it a smart algorithm that's doing it? For the most part, algos are just facilitating orders. They're facilitating order flow. They're a way to execute. Are there predatory algos? Yeah, but the high frequency guys try to front run big orders, and I think that's what's going on. A lot of the times when you see this move down, you just don't have buyers coming in right now into the market. So those high frequency traders are front running some of the big sell orders, but you know we've been hearing for the last couple days now, and probably for the last couple weeks, that hedge funds are having a really difficult time. So those are the guys and girls who are holding big positions. Some of them are being met with redemptions. They're forced to sell. So how do they normally sell? They usually either give it to like a high touch broker, or they execute what's called in the machines. They are using algos, but it's not the algo's fault. Are there sell programs? Yes, people are unwinding. So anyway, that's my quick 2 minutes. I don't think you could just say. I know this is not going to make anybody feel any better, but it's not. There's no Terminator out there who's putting on algo. It's the algos. It's people who are liquidating, and funds that are being forced to liquidate a bit. They're probably being met with redemptions. Stephen Cohen's fund said that they were having a tough time. Balyasny said that they were laying off people, and there's a couple other funds. So while this is going on, I think you just need to let it play out and control what you can control, which is your risk. I know I've been advocating that, holding less positions than normal. Every once in a while, putting on a little bit of risk in the wrong place is going to sting. Putting on a couple positions yesterday, which I did. I was lucky to take some targets, but still, my P&L's down on the day. So, all right. So that's it for the weekend. Main message is just to kind of be aware of these levels and just realize how quickly the market is making and adjust your system to what the market is giving you. All right, that's it. Have a great weekend, everybody, and look forward to doing some research in the Tribeca Trade Group newsletter and possibly figuring some setups out in this market. Thanks, everybody.